Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that sellers were more dominant and ES came back down towards that 36 to 38 support, and responsive buyers have been active there. So at this point, heading into the open, the main resistance is really around 40 to 41, and we have support at 36 to 38, and the market is at an inflection point where we can get some directional movement. So 36 to 38 is key support, and as long as we hold above it, we know that the market could simply be balancing in a range, and it could actually end up going back up towards 42.75 to 44.75, 46.5 to 48.5. And the deciding factor for that is really going to be this pre-market resistance zone at 40.5 to 41. So in the overnight session, what we've basically done is liquidated down and then balanced in this range over here. So roughly from 36.5 up to 39.40 is the overnight balance. And at this point, heading to the open, we're going to be watching to see which way this range, this overnight range down here, breaks. So if we break out above 40.5 to 41, we could be setting up for an upside move, even up to the overnight high, and we could just go through initial resistance. Now, we can still get rotation at initial resistance, and if everything else is looking really weak and we see some signs in real time that support the idea of shorting the initial resistance zone, then it's something we can still consider, but we do have to be cautious at that zone, because at that point the market would be breaking out above 40.5 to 41, which is really the main resistance area here in the short term. On the downside, if we break 36.38, then that could lead to continued liquidation down to the bottom of the balance that we broke out from. So in the event that we break down below 36.38, even though we have some short-term support at 31.32, this could just be a short-term rotation, and then the market heads down to the 26 to 28 area. And this is a spot where buyers can still defend on first test, but after that, the next area is 19.5 to 21.5. So this 36.38 is going to be very important heading into the open, and it's marked as initial support. It can also be viewed as the micro bull bear zone. So if we're holding above it, we know that the market is still in balance, and buyers can step in. And if we continue to just chop here and then break down, then that could be the start of a directional move lower, targeting a move down to 26 to 28, and potentially even 19.5 to 21.5, depending on how weak things are in real time. And then on the upside, 40.5 to 41 is the key resistance short term. Above it, 42.75 to 44.75 is a spot where the market can fail, but only if we're seeing some signs of real weakness, which would mean lack of upside momentum, very negative internals, the other markets still showing weakness. Then that initial resistance zone can still be an inflection point, and the market can fail. But if the market is going to fail at initial resistance, we want to see it trading back below 40 to 41 fairly quickly. We don't want to see it holding above 40.5 to 41, because if it just rotates here and then holds above 41, that would tell us that the overnight break that led to the move up to initial resistance is actually has some legs behind it, and we could be setting up for a move back up to 46.5, 48.5, yesterday's high at 50.5. So above 40.5 to 41, we have these resistance areas which are valid, but they call for caution on the short side, because going back up to those zones would tell us that we're still in a very balanced market, and that would mean that there's not a whole lot of downside potential. So if we're really going to head lower and liquidate, then most likely we're going to hold below 40.5 to 41 and then break 36 to 38. So right now the market is at an inflection point, and it does call for caution on long and short side while we're still in this range. And then once we get some confirmation on bias, once the market opens, I think then we'll be in a better position to see where this market is headed. On the econ calendar, we have the Philly Fed survey at 9 a.m. Central. That is the main catalyst this morning after the open. And then once that's out of the way, I think then we'll also get some more clarity in the market. But so far we're basically just in this balance, right? If you look at the last 3 days, the overnight session, the last couple of days, we're just in this trading range over here, and 36 to 38 is essentially the bottom of that range. So if we hold here, we could be setting up for a move, back up towards the top of that range, 46.5, 48.5, maybe even higher. And if we break it, then we could get liquidation down to 26 to 28. So this is really going to be the deciding factor, 36 to 38, where this market could be headed. And because on the larger time frames we have been in an uptrend, we do want to see that break of 36.38 before we go bearish on this market. So those are the main ideas heading into the open. Let's see how the market reacts to 36.38, 40.5, 41. That's really going to tell us where this could be going, and we'll take it from there.